Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Tuesday, May 28, 2013. Markets were closed on Monday in the U.S., so this is the first day back for us. Whenever we're looking at the markets, on occasion I'll bring out a chart that I'm looking at trading, or I see an opportunity or something that's interesting that I want to point out and use as a tutorial for our users. So this is one of those charts. I've talked about this last week, the IMW, the Russell 2000 iShares. I believe the markets are overextended and susceptible to a pretty good size crash. So what I'm looking at on this particular chart, and I'll explain this chart in a moment, but what I'm looking on this chart is that there's a massive rally up here. We're getting, last week we saw some sell pressure there, first negative week in the past 5. And then we have this week's currently forming. Like I said, today's Tuesday, so the market's not even closed yet, so we're still watching this one form. We won't know what this candlestick's going to look like until the end of Friday. But whenever I have a situation like this, what I do is I overlay a 50-period moving average as well as a 200-period moving average on the long-term chart, and this is going, again, 3 years. Each one of these candlesticks represents a week worth of trading activity. It's weekly candlestick formations there. And what I'm doing is just watching for overextensions, and typically what you'll have is on an uptrend scenario, you'll have a nice move to the upside here, test the previous high, and then pull back down and find support at that 50-period moving average, this green area. That all I've done is run that 50-period moving average right here, and then just says shaded. So everything below that is shaded in green, and then you'll see another one down here that's shaded in red, which is the 200-period moving average. So that's just how that worked out. It's really not as complex as the chart makes it out to be. Then you'll see a rally off of that 50-period moving average area, back up, test the previous high, breakout is fine, and you get a pullback, find support at that 50-period moving average again, and then you rally off again. Well, you can use this, and there's very many different ways that you can use that. Of course, if you were a bull, you'd be looking to buy here, and you could do that by simply buying the IMW Russell 2000 iShares or some various other ETF. You could also short a high point that you think, okay, we're going to get in a pullback, and you could make money doing that. You could use an inverse ETF to do that. You could then be searching back on the long side again here and that kind of thing. What I'm going to be doing this time around, or what I'm looking to be doing, I should say, is I want to short it, but I want to short it with options, and the reason for that is quite simple. You can limit your risk very easily, a lot easier than shorting. With shorting, you have the potential for massive losses. Theoretically, the price of anything continue to rally to infinity, right? There's no cap there. Also, the downside and a gain for short sellers is limited because the lowest it can fall is to 0, right? So the most you could make would be 100%, at least in theory there. There's some various ways you could alter that, but still it's not as there's not as much potential as using options. So with options, somebody could come in here and say, okay, I'm going to buy puts here on the IMW, and I believe that the stock price is going to fall, and it's going to come back down here and do like it's done before, pull back and hit that 50-period, or the 50-period moving average there, and that would make a lot of sense. And there's various different ways you could do that. Options traders may take a put that's just outside the money here, or they may take one down here based on this 50 line. That's the method that I would prefer to use, is to use something that's further out of the money. That's just me personally, though. And then there's even those that would take it way out here, and that's another thing you could do as well. The further out of the money, obviously, the bigger your gain potential. But just from this distance point here down to here, a fall from this point would be roughly 1,000% gain for an option trader. So that's a huge difference there. So they can limit their risk to the upside without even having to use a stop loss limit, because they can only lose in an option the total amount that they've invested into it. And then on the downside potential, it's huge as long as they time it right. And again, if it continued to move lower, they would make even more, right? Okay, so that's a rough sketch of basically what I'm seeing here and the opportunities. Then I want to point out a couple of details that are familiar to me. Whenever we see these nice moves to the upside, when we get overextended, lots of white between the price activity and the green shaded area. That's one of the things I look for, situations like that. And then I look at up here at the ultimate outside, I see the high point, and then the following high point is trending down. The same time period, you can see price activity was actually trending up. That was a bearish divergence, so I'm looking at that as the bearish divergence tells me that this is not sustainable, and so I know that anyway, just looking at how overextended we are from the green shaded area. You're going to fall back down to that area, so that makes sense. That was a great opportunity there. And then again over here, we can see the same thing setting up. We have this nice rally here, it's great, and then we come up here at the high point, And now we have another rally here, but we can see the high points much, much lower. So we have another bearish divergence formation here telling you that this rally here, we see price continue to move like this, is not sustainable. Again, the same setup forming, and that's why I'm looking here at the IMW as a short. The overall markets are actually overstated and they're all going to fall, but I'm looking at the Russell 2000 iShares. Let me clean that up a bit. Now let's say you're a bull and you decide, okay, I disagree with your theory. I don't think the markets are susceptible to any kind of a crash or anything like that. All right, that's fine. If you were a bull, I wouldn't be buying at this particular point in time. Why? Because price activity is trading above the or at or above the the upper Bollinger Band line. We're just completely erased my mind. All right, so the upper Bollinger Band line point here, we can see that we find a top. Again here, we can see we find a top, and then again here, we're trading at that level again. That's why I'd be more cautious in this area. I know you can find areas where you have found yourself in the upper Bollinger Band line and continue to hug that and continue to move higher. That's fine. I understand your concept there, but that can't go on forever. We've already had that stage at this point here. So at some point you would say, okay, I'd wait for a pullback to be a buyer, as opposed to just saying, I think the bears are wrong, we're just going to go straight up forever from now on. That's probably not going to happen. So I'd look for a pullback if you were a bull, and if you're a bear, I'd be looking for an opportunity to get short. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.